Welcome back to Tip TV Master Investor. It's a great pleasure, as always, to introduce Mr. Swen Lorenz. He's the CEO of Master Investor. Sven, very good morning to you.
Good morning.
You look tired. Have you got jet lag?
Yes, I've just come in on a red-eye flight from Munich. We've had an event yesterday, 30 of the wealthiest and most sophisticated and experienced investors in Germany meeting behind closed doors to discuss investment strategies. And we had a special speaker that evening. We had Jim Melon fly over to Munich. He spoke about Brexit, the euro, everything that's happening in the European Union right now with the banks in Italy, the upcoming political changes. We have another referenda coming up in Italy. We've got elections coming up. So we basically brought this group of people together to speak about how to make sense of all of this and how to make money out of it and how to avoid the manifold dangers that also come out of all these developments. And it was a very private event. It was literally behind closed doors. We did not allow any media in on purpose. But because we co-hosted the event, I just pulled out my iPhone at some points and shot a few clips, and I brought them along for your viewers because I think they can benefit from this.
So just before we go to the clip, Jim Melon, I'm a novice investor. Just remind me who he is, please.
He is a long-standing and quite widely known investor in the UK who started as a fund manager. Is now, I think, number 135 on the Sunday Times rich list with a fortune of £850 million, self-made and all made from investments. And he's particularly good at calling the big trends early. He gets those really, quite accurately. And that's why he's got quite a reputation now and is difficult to get hold of. So we're very, happy to occasionally have him for an evening.
Okay. Well, without further ado, should we take a look at the first clip?
Let's go for it.
But the main and worst decision that was ever made by the European Union was to introduce a common currency, which is now in 18 of your countries. That common currency is a disastrous economic experiment. It's probably the worst economic experiment in the history of recorded economics. And if anyone here feels that the euro is going to remain as a currency, I'd be happy to debate them on it, because I think it's got very limited time life left. And the problems are mounting every day. The cracks are there. And when I wrote in 2006 about the coming economic collapse, there was 2 years until that happened. I would say that the euro has got between 1 and 5 years left of life, and it's gone as it currently stands. And the reason that I wanted us to be at, and it is a selfish point, Arno, I don't know where you are, but you're right, here you are, is because when the boat sinks, you want to be on the lifeboat, you don't want to be on the main ship, singing the national anthem, or Ode to Joy in the case of the European Union, and being dragged down in the wake. And the collapse of the euro, which is, in my opinion, a certainty, is going to have unbelievable economic consequences. One effect will be that all banks will be nationalized. They have to be recapitalized, changed. There's going to be a tremendous breakup of debt. Who owns what in the way of debt? Who goes into a new, stronger currency union, or does every country have its own individual currency? All these questions are unanswerable at the moment. But anyone who thinks that the euro is going to remain as a currency in its current form, I think is absolutely deluded.
Wow, so that was a powerful statement from Mr.
Absolutely,
Jim Melon.
yes.
In terms of the Germans, okay, why were they so interested as a group to hear this speech?
Well, I meet a lot of German investors, being German myself, and they get a very one-sided perspective over there from their media. And you have basically two groups of German investors nowadays. You have those who, I believe, live in denial about what is going on in the European Union, in the Eurozone right now, about the changes that are coming there. And they think that people like us who come up with these statements are nutcases, conspiracy theorists, we're just wide of the mark. There's a good number of those. And then you have a very significant percentage of very serious investors in Germany who are right on the same page, who are extremely concerned. They're starved of information because the German media doesn't like to look at it from that angle. There is obviously a huge political perspective to all of this. And it was very interesting to hear from some of them what's happening in the German family office scene right now. And one of the big trends is a lot of money is being moved over to Switzerland again, not to hide it, but to have it in a safe space.
Right.
And there is a noticeable difference right now to what happened in 2008. In 2008, in the big financial crisis, you just shifted your money to Switzerland and you thought that's good enough and it's safe there. Now German investors are looking for much broader diversification. So they're moving some of it to Switzerland, they're moving it to Singapore, to Uruguay, Panama, Canada, the United States. They want to have global diversification because they know that what is coming in the Eurozone could be so bad, could be a financial tsunami of such proportions that even Switzerland, which is stuck in the middle of all of this geographically, even Switzerland might be affected politically or financially and economically. So they're seeking global diversification right now, and that's quite a noteworthy trend.
Right. So did the Germans tend to agree with what Jim was saying, or did they strongly disagree? What was your take on that?
I think it was an eye-opening evening for them. I guess if we had run a survey before and after, how do you feel about some of these subjects, there was a noticeable shift. Also just simply because Jim presented a lot of hard facts, numbers, that you just simply can't argue with, but numbers that these people just hadn't seen before in that sort of context. And I think we got quite a few people to move much closer to our view of the world than the other way around.
Understood. Now, in terms of the investors themselves, what can they do on the back of what Jim has said?
Well, I've got another clip for you. Why don't we take a look at that?
Here is my main macro ideas. I would go long the British pound against the euro, okay? This has nothing to do with nationalism, because I'll sell the British pound tomorrow if it goes up by 10%. So it's just my current view. And if you're interested in what I do, and we trade every day, I put as much as I can on Twitter. The best macro idea is gold. All right, so gold at the moment is about, if I said $12.60, $12.70 an ounce, I'm sure it's going to go to $5,000 an ounce in the next few years, because inflation is coming back, and they don't make much more gold every year, and we are going to have an inflationary, we may have a little bit of deflation beforehand, but we're going to have an inflationary melt up, and I would be long gold and anything to do with gold as my best single macro idea.
Okay, so let's talk about gold for a minute, okay? Everybody that I talk to is bullish on gold, and yet the price keeps dropping, but we've got quite a big headline here.
Absolutely, yeah. Jim is very bullish on gold, as you've just heard, and my view is that we need to have these events unfold a little bit further before the mainstream moves on to the whole idea of gold. And it is an extremely illiquid market at the end of the day. There's not that much gold out there, and there will be a tipping point. I think the majority of investors is still very much in denial about the risks that the Eurozone is facing. But the tipping point is moving closer, and once it gets moving, it'll move much closer than anything you've ever expected.
But we're at 1,200, 1,250 now. Can it really go as high as?
If the German banking sector is hit as hard as we believe it will, and we have analyzed this to a degree where we think it's a certainty, the question is timing. Will it take 2 weeks, 2 years, 5 years? That we just don't know.
Right.
Quite often at least I in my career have been calling things too early.
Yep.
Existing systems stay in place sometimes for much longer than you think. But once it gets moving, the very illiquid gold market, I think, will be in for some very dramatic developments.
I'm going to ask you one question that's not in the script. Do you think Deutsche Bank will go bust?
It will never go bust because the German government is very solvent, and if Deutsche Bank actually went bust in that sense, the whole German economy would have a problem of a proportion unlike anything you've seen since the 1930s. And what will just simply happen is that the German government will bail out Deutsche Bank. I think Deutsche Bank is widely known, in my circles at least, for basically the senior management doesn't even know what they've got on their books. And that's been known for many years. And that situation is now coming to the fore, and it will eventually be bailed out, nationalized, maybe merged with another German bank. That is definitely going to happen. If I wouldn't touch Deutsche Bank with a 10-foot pole right now, except for trading, of course, because it's very volatile and that's interesting.
Understood. Well, just on the footnotes of that, I was speaking to a trader a while ago. He said it would make the Lehman collapse look like a tea party.
I completely and 100% agree with that.
Understood. Okay, so when are we going to see you again, Sven?
I'll be back here next week.
Okay.
I have some surprise investment ideas for you next week. I think something very exciting in the UK market. Then I'm going to Japan for 2 weeks, and I'm pretty convinced that I'll come back with some interesting stories about the Japanese market when I'm back here in the UK.
Sven, safe travels, but we'll see you next week before you go to Tokyo. I'm desperate to join you on that trip.
Thanks, Nick.
Thank you.